All right. So you did the work. You have 25 to $100,000 in funding available to deploy into a business slash investment opportunity going into 2025 or whenever you may be catching this recording. We're kind of focused on 2025 right now because the end of the third quarter in 2024, the time of this live stream. So you can apply the principles that are going to be covered in this video if you're catching it later on after that time frame. But focused on the time slot that we're in now, if you have that kind of funding or more, and you have secured it strictly for the purpose of deploying it into an opportunity that is maybe not your ground up business or freelance operation or some type of gig work. So essentially, you're looking for an opportunity to get into a business or an investment that is not something you're developing yourself, that may already be for sale in some existing circumstances, etc. So the goal of this is to help you develop an exit plan with your capital, especially if that capital isn't like long-term capital. So what's an example of long-term capital? That's going to be taking a HELOC on your home, or like refi cash out on your home is a good example of longer term debt, because this is something that usually you're looking at 10, 15, 20, 30-year timelines on, okay? Just as an example. For those of us that are exercising business lines of credit, business loans, personal or business credit cards, these are all short to intermediate term funding options. So that means that it is very important to have an exit strategy or have some kind of deployment that can start helping us to service that debt and then, of course, eventually pay it off. And we need to positive arbitrage that debt. So that basically means whatever it is costing us to get access to that capital, we have to be certain that we have a strategy that we can deploy it into that will surplus us what it's costing us to get that capital, to have that capital. So what I want to do is kind of break this down in a framework of where we're headed right now in this economic system. And again, if you're finding this after the fact, then just try to apply these principles to the timeline that you're in. But right now, it's going into the fourth quarter of 2024. We're going into 2025. A lot of my live streams right now are really focused on gearing up for 2025. It takes time for ramp up. So that is why I'm focused on covering these topics. P&R, my guy, never let me down. Good to see you, my man. So we want to make sure that we have strategies in place that we can start exercising and putting into motion now to let them get traction by 2025. So again, if you're catching this in the future, apply those same principles to the timeline you're in. So what we want to do is first assess the capital that we have and where it's from, because that's going to affect the type of returns we need and the speed we need those returns. So if you have longer term capital that you've gotten your hands on, and I'm going to say longer term is anything 10 years plus, 10 years or more out to pay back, which is mostly going to be something like, business, home equity line of credit, cash out refi, things of that nature. Business lines of credit, depending on where you get it from, can run out to like 10 years on their terms, occasionally longer, but a lot of times most business funding loans and lines are 5 to 10 year windows. So that's intermediate to somewhat longer term. So if you're 10 years plus on your payback time for whatever capital that you have, that's one set of strategies. And that can be the kind of capital that is focused on, longer term real estate plays, like long term rentals, for instance, giving it time for cash flow to build up, giving time for equity to build up, tax benefits to accumulate. That's a good example of deploying that kind of capital. The next one we got is if your capital is more intermediate, which I'm going to nail at around the 5 year mark, give or take 4 to 6 years, 4 to 7 years to pay back on that debt. Then, and backing up for a second, on a long term debt, if it is also cheaper debt, meaning that, mortgage related debt, well financed, quality business loans and lines really have decent interest rates. So that's also a big factor of return as well. But again, a lot of times that's something that can be lined up with, Intermediate to longer term real estate plays is a good example. Honestly, at that window of time, you can consider getting into the stock market if you're looking at 10 years or longer. I don't recommend anything shorter than 3 to 5 years in the stock market, and that's me being FINRA licensed. When it comes to investments, saying that. Um, if you're into day trading, that's a different story. That's not my arena, so I'm not going to step on that one. But if you're looking at, actual jumping in the market, ETFs, mutual funds, those that type of thing, index funds, then you're looking at around a 3 to 5 year bare minimum investment window, ideally out to the 10-year plus mark. If you're getting longer term capital, like equity out of your home, something to that effect, then you can dive into the stock market and feel pretty comfortable about playing that game for that window of time and getting a positive return. That's long enough to come out pretty good. Intermediate 4 to 6 year window, give or take, you know, again, depending on the cost of that capital, now you need to start looking at, you know, shorter to intermediary funding strategies. Again, if you focus on real estate, you're looking at maybe more like short-term rentals. What's the new, kind of a new trendy one is mid-term rentals, where you're leasing out to like professionals, like traveling nurses. You're looking for something that's going to have higher cash flow, still give you some kind of appreciation. And, again, this isn't really focused around it, but if you're looking to build your own business, this is a really good time frame to give yourself some time to develop your own business. But outside investments, you want to look at real estate from the short to intermediary strategies. Fix and flip, of course, is always on the table, depending on the economics in the real estate market at that time. That's also good if you want to work in a strategy like that to raise bulk capital, not necessarily tax benefits or long-term income, but bulk capital. Short term is going to be anything under 3 years. Anything under 3 years. Most likely, this is going to be why our credit cards kick in. Those of us using credit cards as funding tools, we're looking at 0% APR, 6 to 18 months on average. And if you're really skilled at the game, you can roll those over into more 0% cards for another 6 to 18 months. That game is eventually going to, plateau out at some point. So I say 3 years of playing that game, which is basically 2 full cycles of 0% windows on credit cards, which is, again, we talked about it in previous live streams. It's cool as long as you have an exit plan, a strategy. It's risky, but if you know what you're doing, or at least have a solid game plan, obviously it helps to have good, stable, solid income or financials to be able to support this personally if push comes to shove. But if you're looking at 1 to 3 year funding methods, or even shorter than one, maybe 6 months to 3 years in funding methods, that's going to be short term. That's straight up your fix and flip type of scenarios. BRRRR methods, where you're like buy, rehab, rent, refinance, repeat, that kind of thing. You're definitely going to want to be looking at strategies where you can get in and out, you know, in a pretty effective time window and get your capital back and get a positive arbitrage. Now, that is not, all of that is kind of a warm up. That is not really what I want to show you, yet. That's kind of just a warm up of real estate focused strategies, because I know a lot of us, I cover these on live streams. Most of us love real estate as an investment slash business option. So it's just to put a framework around how to think about your time frames, how to think about your cost of capital. What I really want to cover, and I'm about to share my screen in a moment, is looking at other business options based on the economic cycle that we're in, and then the potential timelines, the amount of capital, the timelines on that capital, and the cost of that capital as well. So when you look at having $25,000 to $100,000 in funding, pretty attainable, first off. Secondly, when you have access to that kind of capital, in most cases, that's enough to get a lot of operations off the ground. That's enough capital for you to buy an existing business. It's enough capital to buy or start a franchise. It's enough capital for you to get, ramp up costs that you might need to start the operation. It is enough capital to get the ball rolling for many business models, many, many, many business models. So I do want to put that in perspective, because I do know that there are some of us out there who have access to this kind of capital, or could pull the trigger and get access to this kind of capital. and take it for granted because we constantly see so much attention around these really elaborate numbers on funding, like six figures plus, 150, 250, etc. And don't get me wrong, obviously, the more the better is an understandable psychology. But it is important for you to understand if you got 25, 30, 40, 50, 60, $70,000 in capital that you can legitimately deploy. I can tell you right now that you're going to have plenty to start a business if you know how to look and you have a broad enough mindset, an open enough mindset. So that's what I kind of want to share with you for a second. Not too much, but I just want to screen share some very basic, generic Google searches for these types of business opportunities and just give you an idea of how much is available under $100,000 when it comes to business and franchise opportunities. So I'm going to give you a quick screen share. We'll start here. And hopefully you guys can effectively see this. This is a quick Google search where basically I took a look and said, what industries, now that we're in 2025, going into 2025, what industries are going to be favorable in the economic cycle that we're going into? When we were going through 2021, 2022, 2023, and even early 2024, first half of 2024, when interest rates were on the trajectory up, and that flipped the economic system, that flipped industries that were cyclical. So basically what that means is some of us could have been working in business operation or investments in industries that were interest rate sensitive. So real estate is a blatant example. If you were working in, investing in, or connected to the technology industry, you know that technology stocks and companies and industries took a beating. Banks failed. Really large or relatively large banks failed. Some of the largest in a long time failed during this interest rate hike. So media is moving fast, but in actuality, a lot changed in the 2 years that we just experienced. Very cyclical, very interest rate sensitive industries took a beating. Real estate transactions dropped in the residential market by 40% at one point in time. I'm not sure if it's still there, but that is ridiculously insane for real estate volume of transactions to drop like that in such a short window of time, to show you how fragile the parts of the economy was around interest rates. You could have been in industries that got laid, where you could have been laid off, work slowed down a lot. Your investments might have plummeted depending on your 401ks, stocks, portfolios. Your real estate could have, took a beating, appreciation could have dropped, rents could have dropped depending on the circumstances. So we are going into an economic cycle where interest rates are changing now. Officially, at the time of this recording, the Federal Reserve dropped interest rates. Not only did they drop, but they didn't do that anticipated 0.25 or 25 basis point drop. We did an entire 0.5% or 50 basis point drop in the Fed's fund rate. So the Federal Reserve is pivoting, and they're pivoting with intention. Jerome Powell's breakdown was he's not looking for the Federal Reserve to be late in dropping interest rates as they feel they were late in raising them. So they feel the economy is doing pretty good. They want to drop interest rates so the economy continues to function the way that they feel like it should function. When it comes to having access in 2,500,000 plus in capital, these interest rate sensitive sectors are now on the other end of the spectrum in the next coming couple to few years at minimum. Think 2025 to 2027 at least. If the Federal Reserve is able to continue to keep interest rates down, the same industries I just gave you examples of taking a beating, thank your retailers, technology companies, real estate, commercial is still taking a beating. Residential was compressed. In the financial sector, we had the largest banking collapse in decades. All of this is about to turn around if the Federal Reserve can continue to drop interest rates. So that means for you sitting on this capital, these are the sectors that you should be paying particular attention to, or the derivatives of these sectors, meaning that you might not directly go into real estate, but you may find industries or subcategory industries that complement into real estate. So if real estate's booming, something related to real estate's doing well. Let's just give a hypothetical and say real estate's doing well, interest rates are down, and construction and home renovations and home flips are going back up. The transaction volume is going back up. If you're in any kind of blue collar trade skill work like plumbing, electrical, you know, energy efficiency, or anything related to these different things, you're not in real estate, but you're in real estate. You're going to experience the derivative or the byproduct of that industry starting to do better. So if it's, you know, the financial sector, banks, you know, brokerage firms, insurance companies, again, think of those industries and their derivatives. They're going to start to do better. They're going to start to do better. Technology companies, you can think of the various broad range of what's considered technology companies, going to do better. Consumer discretionary, that's a lot of your retails, wholesales. So, you know, from an investment point of view, business, or, you know, freelancing side work that you may have going on, how do you attach yourself to these industries that are going to do really well? So I pulled up another source. I got Forbes here. This is a 2024 article. And as you can see, latest projections predict 3 interest rate reduction. I guess that was intended to be 3% interest rate reduction in 2024, or okay, 3 interest rate reductions. So the Federal Reserve to cut 3 times in 2024, with more to follow in 25 and 26. So that's the Fed's own SEP, or economic projections, for the next 2.5 years. They plan to do this. Forbes is basically saying, how do interest rates work? What is the current interest rates? What are the impacts of lower interest rates? Sectors which may benefit from interest rate cuts. That is what we're looking for. You have $25,000, $100,000 or more in capital, or you're on the verge of having access to it. You want to catch the wave at the right time. That's now in a moderately near future. Next 6, 9, 12 months, you need to get your hands on the capital if you don't already. You need to have an understanding of the capital you're getting your hands on, the source of it, the timeline, and the cost of it. Because as you can see, we have industries that are expected, sectors that are expected to do well, that we all can capitalize on. Investing in, business participation, or gig work, freelance, and independent contracting. And of course, W-2 work as well, but that's not really tied to you having access to capital. So the 6 sectors that Forbes broke down here: consumer discretionary, information technology, utilities, real estate, consumer staples, materials. This can branch out to manufacturing when you think materials. Consumer staples is going to be your wholesales. Consumer discretionary, think travel. Think travel. Excess money, events, concerts. People are going to start, they already kind of were. I don't really know how much it stopped, but people are going to start spending excess money. Festivals, events. I am in New Orleans, Louisiana, the outskirts of it at this point in time. Next year, 2025, on top of Mardi Gras being one of the biggest events in the year around that time, in the world around that time, we have the Super Bowl and Mardi Gras a month apart. Then we have festival season. Next year alone, in the first 5 months of next year, is going to be crazy in my region. It's my job to find a way to get myself inserted in that and take advantage of it. Going into January through May, we slow down June to August here in New Orleans. So that's an example of this consumer discretionary, because Mardi Gras, Super Bowl, and festival season, the majority of the United States and patches of the entire world are going to make their way to my tiny little city to celebrate, party, and be part of these festivities. So this is how you need to be thinking going into 2025 with the kind of funding that you either have or on track to having. And again, just as a quick, plug, shameless plug, if you're looking to get more context on how to get yourself positioned for 25 to 100 grand or more in funding, not just getting you funding as in running you through, application plays, etc. I'm talking about somebody who can actually teach you how to structure your bank accounts, personal credit, business structure setup, and help walk you through funding. I have a link in the description or in the chat box if you're on the live stream. If you're catching this in the replay, leave a comment. I can assist you. So these are the 6 sectors that at minimum are looking to do well. And there are subcategories outside of these sectors that will start to get byproduct profits and benefit and growth. So the point of dropping interest rates is to increase the velocity of money, meaning that we're more money to be pumped in the system. And really, more importantly, velocity is the speed at which money can travel. When interest rates are higher, less money is borrowed, less money is borrowed, less money is spent, less money is spent, less money is earned, and the cycle. When you look at interest rates cutting, that means money is cheaper for banks from the Federal Reserve and commercial purchases of debt, if you want to say it like that. That means when banks get it cheap, they can lend it to us cheaper. When we get it cheaper, we spend money, we invest money. And then that all cycles back through the economy. So money starts to pick up speed. So that basically means that the sectors we're looking at here and their derivatives, their subcategories, subsectors are going to pick up. These are all sectors we can get involved in. There's no excuse. Consumer discretionary is staring us in the face. Even if you are just have a product or service in this discretionary space, so think about fitness, think about, yoga, for instance, things that people don't necessarily have to have, but they enjoy or they find fulfillment or purpose in, and they're ready to spend money on it. So information technology, the different directions that can go. Anything tied to AI is a good example. Even if you want to think about these various technology platforms that are out here, utilities, how that goes, green energy, gas, oil related, real estate, wide open. You know what time it is with real estate, consumer staples. Again, think of your wholesale clubs. Think of your daily staple needed items. And then, of course, materials includes resources. So if any of you are kind of thinking gold, silver, lithium, etc., all these different resource sectors, that is a derivative subsector of materials, manufacturing, all wide open. Cool. So let's take a look at another basic Google search. Biz, buy, sell. Largest online platform for businesses for sale all over the country. Actual businesses, franchises. Literally, as you can see, you can literally search businesses in a plethora of industries, as you can see, and anywhere in the United States. Same with franchises. Same thing. If you go to Franchise Direct, another basic Google search, franchise opportunities for sale under $100,000. This is you all. This is us. So as you can see, I'm gonna just do a light, gentle scroll. You're not gonna see anything here over $100,000. So uncheck that. As you can see, a broad range of sectors, industries, opportunities. We're not going to get into these because, as you can see, I'm doing a light scroll. It is dozens, but it is all 100K or less, $25,000 to $100,000. If you have it, this could be where you could be deploying that capital, as you can see. So this is the kind of framework blueprint that I want to put in front of you for this live stream. I want you to think about not reinventing the wheel, finding things that work, time tested and proven. And a lot of them are boring. Some of the best business opportunities are going to be very boring. Also, on top of what I just showed you with these various hundreds to thousands of business opportunities across the nation in our backyard, you also have the opportunity to invest in other people who are investing in businesses. I had a meeting today with a client, business consulting meeting, lending in the funding section. A client that's looking to launch his kombucha brand. Now he's already in real estate. He already owns property. He's also a commercial real estate broker, commercial real estate agent rather, and has a passion project that's developed into a real business as a custom homemade kombucha brand. So we're talking about various strategies to get him a pool of funding to fuel his kombucha brand launch into 2025. In the back of my mind, I'm sitting up here thinking about, man, if I didn't want to have a conflict of interest based on the grounds that we're meeting for, I literally could he needs $25,000 to $50,000 to get his operation off the ground for the next 6 to 12 months. That is something I can give him. That's back of my mind. I'm like, man, I got 25 to 50,000 all day for this. Because what he had going, he had a lot of infrastructure set up. He just needs more capital. He needs kegs, he needs cans, he needs supplies. He wants to get a delivery van operational, etc. These are the types of opportunities. I'm gonna see if I can end the screenshot here. These are the top types of opportunities that are available. All right, I'm back with y'all. Everybody coming in, let me know you're in the building, who you are. Quick hello, like, and leave a chat, leave a comment, support the video. Let us know you're in the building so I can give you a quick shout out. So let me know if you have any questions if you join late, because we are, I had a couple of my guys in early, but let me know you join late. You have any questions you want to catch up on the topic. Again, we're basically brushing up on $25,000 to $100,000 of funding that you have available to you, or you can step right into in the near future, and where to deploy it. We covered the concept of how to look at it and analyze how to deploy that capital. You need to know the source, timeline, and cost of capital. You need to know what industries. You don't want to get your hands on this capital, have it to deploy, and get in the wrong industry or the wrong sector, like you could have did a couple years ago, potentially getting into real estate or getting into technology at the wrong time, or the wrong company that wasn't ready for those interest rate hikes. As examples, all of this matters. So you need to understand your capital, the source, the cost, the timeline. You need to understand what sectors, where the economy's headed, and what sectors will be favored as the economy shifts. So with that having been said, then I want to break down, after we broke down some of the 6 or so hottest sectors expected, then we're looking at all of the business opportunities that are easily Googleable, that's a word, on the internet from reputable platforms. We didn't even look at online businesses. There's a whole segment for just online businesses for sale that are accessible at $100,000, $25,000 to $100,000 or more. Wayne, my guy, what's going on, my man? How you feeling? So literally, this is an opportunity potentially of a lifetime. It's not that often. Honestly, the last time interest rates made serious fluctuations was a couple to a few decades ago. We're living through pretty interesting times where interest rates are changing right before our eyes. Entire sectors are shifting. I don't want you to mistake the time frame that we're about to go into for play and think that you're going to get an opportunity to do this again in 3 to 5 years. If this is done effectively and the market is able to be stabilized, the Federal Reserve sticks a soft landing and doesn't launch us into a recession, and is able to keep interest rates low and inflation doesn't surge again in the next 3 to 5 years, which is a big question mark, we are upon an economic shift that is highly likely going to be once in a decade type of opportunity. That means the next 2 years, 2.5 to 3 years, if the Federal Reserve can stick to dropping interest rates, these opportunities are going to be as ripe as far as getting in early as they're going to get. This is why funding is so important. Banking relationships, credit is so important. Speed, your ability to execute when these pivots and shifts happen. Technology and economics are moving faster than ever. We are literally living through historic times where the Federal Reserve has moved interest rates from the lowest they've ever been in U.S. history to the highest they've been in 2+ decades in a matter of 2 years. From COVID to 2022, 2023, 2024, 2 to 3 years, 4 years, we saw near zero rates all the way up to Fed's funds rate 5.5, pushing mortgage rates and everything else that was normally 7, 8, 9, 10+% and everything higher, decades high. What we're about to see is the Federal Reserve try to stabilize us back to 2019 level interest rates, give or take. This is going to put us around the 3% mark on the Fed's funds rate by sometime in 2026 or 2027 if the Federal Reserve executes flawlessly. Real estate is going to change. The stock market is going to change. Business opportunities will shift. Some businesses might be as cheap as they're ever going to be right now. Because of the timing, because of interest rates, excuse me, and because of the economic cycle that we're in. This is your opportunity to position yourself for tremendous growth. You need to get your funding together if you don't already have it. $25,000 to $100,000 is pivotal money for you to have access to going into. I see y'all lighting the chat up for me. I appreciate y'all. Make sure you leave a like as well. Chat down below with any questions. Chat if you need me to catch up on anything that you feel like you missed. This cycle that we're going into is going to be really opportunistic for those who are in position. If you don't have $25,000 to $100,000 in liquid capital that you can deploy, then you need to get to it. You need to get to it. And I'll be honest with you, I don't recommend it be your cash. If that's your mindset, go for it because it's great that you have it and it still should get the job done. But if you have cash and you can preserve it, and you've done the work on your credit, you've done the work on a business entity, you've done the work on access to capital, exercise that. Our financial system is designed for you to exercise that. It will reward you. You need to be looking at these opportunities. It's not just about real estate. Real estate is a phenomenal opportunity, but real estate is also a net worth game in a lot of cases. If you're playing a long-term rental game, that's a game of accumulation. If you're playing any variation of buy and hold, it's a game of accumulation. So this is not something that you're going to turn over and make crazy money in a year, 2 years, 3 years. You're looking at long-term cash flow, long-term appreciation, long-term accumulation of tax benefits, mortgage pay down, etc. Real estate is, unless you're fixing flipping, real estate is not a short-term game. Are there strategies available? Of course. But generally speaking, most of us are going to be looking at buy and hold with real estate. Commercial real estate, speaking of such, commercial real estate, if you have $25,000 to $100,000, you can structure great commercial real estate deals right now. That can be anything from small apartment complexes, office spaces. Office is really in a rough place in a lot of cases. Self-storage has always been attractive, always been a sexy one. That is another one that is 25 to 100 grand. Do your due diligence. Check out your, LoopNets of the world, website that goes over commercial real estate for sale. Connect with commercial real estate agents. Build your networks. These people are right on top of these opportunities. Connect with these people. You got $25,000 to $100,000. There's deals to be made. There's deals to be made. You have access to that kind of capital. That's the opportunity for you to start getting into these depressed sectors that are going to change when interest rates adjust. It's not always going to be as sweet as it is now. That was the other side of interest rate hikes that people weren't really talking about as much. Some smart people were, but a lot of people were taking for granted the fact that, everything's more expensive. Inflation's up and interest rates are up. Cool. What's down? What's compressed? Valuations. Residential real estate kept growing, but it didn't grow as fast as it would have grown. Commercial real estate is compressed. You had the COVID situation on top of interest rates. on commercial real estate, meaning that a lot of commercial space was inoperable, messing up, leases, cash flow, which cap rates and cash flow determines the value of commercial real estate. So if they can't fill these spaces, office spaces, for instance, etc., they can't sell that commercial real estate for what it is. It would have sold at 100% or 95% occupancy at 50% occupancy. So if you got $25,000 to $100,000 in funding, do your due diligence now through the next 3 months. Hit 2025 with both feet in the dirt. This is your opportunity. If you don't have $25,000 to $100,000 in capital, catch up with me. I will help you. I will work with you. I will work with you. I have links up at the top of the chat for you to connect with me on there. And you also can just reach out to me directly and we can work out. If you're in a different situation and the pricing that I have available to work with me is rough, but you still want the help, I'm open to talk with you. I'm not a nonprofit organization. I have real knowledge and real skills. I want to be paid for my work, but I will 100% work with you, especially my pioneers that are here on a regular basis. If I'm familiar with you, I will connect with you for sure. And we can work something out to help you get you in position. If you don't have 25 to 100 grand or more in capital that you can access going into 2025, we need to talk. Or you need to find somewhere to go and get some information. If it isn't me, cool. I'm going to keep it pushing regardless. I'm going to grow either way. But you need to find somewhere you want to go to get the help that you need. Because 2025 is where it's going to start. And it's going to be fast. Interest rates have a lag effect. What Jerome Powell and the Federal Reserve is doing on interest rates today is not going to show up in the economy for months. So the cuts won't kick in until second quarter, third quarter of 2025 before we start to see the effects of it. That's why they're so concerned about the rate hikes and how long they held them up, because they know that right now we're just starting to feel the full effects and still have yet to feel the full effects of the rate hikes here in the fourth quarter of 2024. We're still not done. Unemployment is still going to go up. The economy still may slow down or not grow at the pace it could be growing. So I want you to have this in mind, that your timing is everything. Get your credit to that 720 plus mark. Stabilize your W-2 income if you're working a job to use as a catalyst to help you qualify for funding. If you're doing this through a business, make sure you structure that business properly. Name, phone number, website, industry, the fundamentals, good business address. Maybe even start collecting some vendor trade lines to get some backup, some business credit development for those businesses. Not because that's the way to go for cash funding per se, but because it legitimizes your business when it's ran through the systems, when it's ran through application processes. Vendor trade line credit is not going to walk you into American Express and get you a $50,000, $100,000 business credit card on line of credit. It's not. You're going to need a lot more than Uline, Quill, and Granger to get that accomplished. But these same vendor opportunities can get you business credit on Dun & Bradstreet, Experian Business, Equifax, that when your business is ran for a business credit card application, they will still run your business credit and business EIN number. It's not going to make or break the deal per se, but it can help your legitimacy of your entity if you're doing this funding strategy in that capacity. Now, those of you who may be thinking about pulling equity out of an existing property and doing this in your personal name, cool. Make sure your financials are in order to do that. Interest rates are going down. You're already seeing 5.5%, 5.75% available for those with prime credit for refinances. I'm looking at it. My mortgage right now on my primary residence is 6.625 because I bought, a couple years ago or a year and a half ago and some change when interest rates were towards their peak. I got a great deal still because the average interest rate at the time was over 7% for prime credit. So I had, different strategies I put into play that got me in at the 6.625 at the time was really good. But I'm already at a situation right now, just from the first Fed rate cuts, where I can get a full percent off my of a refinance right now, just about right now on the first Federal Reserve cut. So if you're looking at using your property, your equity in your property to get your hands on capital to invest in other opportunities, more real estate, the businesses that I just showed you guys on the screen share, make sure credit, your income, DTI, the property is situated. Make sure everything you need to qualify is situated. I'm telling you this now, and I'm on my way to ending this live stream. We're not going to do too long unless y'all have questions. But I'm telling you right now, timing is really vital. Timing is really vital. Make sure that you have your situation in order. Know what type of funding you're going for, how to get it, what it's going to cost you, and getting an exit plan, your timeline for getting out of it. Everything's about to change. There's some big sharks in the water who are already loaded with capital, dry powder, as they like to say in the financial and the investment industry. People are sitting on the sidelines salivating at the opportunity. So I'm just telling y'all each right now, those of you on live and those of you who are going to catch the replay and stayed out through this point in time, I wanted to give you a really quick breeze through of a foundation that you can take to access great opportunities to grow and catapult your financial position when the economy is in shift. It's in flux. It's moving. It's a game of musical chairs, and the music is about to stop. And where you are is where you're going to be stuck at, potentially, where everything's going to get more expensive. Inflation is not stopping, by the way, people, for those of you paying attention. It's only growing slower. Prices only raising slower. It's not stopping. The same can be said for interest rates going down and the almost direct correlation to assets going up. Precious metals, stocks, real estate, all are going to grow in the next 2 years if the Federal Reserve continues to cut rates 3 years. You need the capital to get your hands on these assets. What I'm suggesting is get the capital, get a good business or freelance, whatever the case may be, business-related activity, independent contracting, whatever. Get the cash flow from that and deploy that into the assets. Get the cash flow from that and deploy that into the assets. Once you build a sustainable business or buy a sustainable business or franchise, then that is not easily taken away from you. That money keeps coming in and you keep deploying it to capture real estate, jump into the stock market opportunities that's coming, buy precious metals on the side, and get into the resource sector. That is what this looks like. So if you have that kind of funding, 25 to 100 grand is the sticking point that I had, because I know many of you can qualify for it or already have it. 100,000 or more is starting to get into the big boy leagues, starting to get on the grown man stuff. Not that any of you are not big boys and grown men, but it may be a situation where you're not there yet. And I don't want you to think that if you don't have $100,000 plus that you can't invest or you can't make moves. That's not true. $25 to $100,000 to get a whole lot of businesses off the ground. You just need to know your timing. You need to know your arbitrage, your numbers. You need to understand what you need to be making. You need to make sure that you have a backup plan or exit plan. You need to have a stable income personally to be able to support yourself and back yourself up, or an opportunity to flip that debt into something else, 0% or cheaper, or refinance, however, to protect yourself. So anybody have any questions before we wrap this up? I got a few of you still on here. I got a handful of y'all still on here. Let me know what questions around accessing the funding, business opportunities, sectors and industries to invest in. Do you have personal things holding you back from getting access to funding that I can give you a general response to while we're on the live? What are y'all, any questions? Any thoughts, any questions? While I'm waiting on y'all with any potential questions, I got a link in the description to work with me one-to-one. There's also a link for you to invest in this channel and actually sharing the profits and revenues of this channel. Opportunity will not be here forever. It's an opportunity for you to earn a very decent double-digit return on your money by investing in this channel directly and sharing in the revenue over time. That link is also at the top. Of course, P&R, my guy. Of course, you've been on these live streams, you catch these long forms. You already know what it is, how it's coming. I'm gonna bring y'all the best every time. Any questions? PNR, Wayne, any of y'all? I got a few more of y'all that haven't let me know who you are back there. But let me know. Anybody else? Questions, thoughts, plans? What are the plans? Any plans on buying businesses, starting a franchise, buying into a franchise? Any plans around this in the 2025 range? Any plans on this? Are you looking at these opportunities? If you're watching the replay, answer in the comment section. Any plans? Let me know what the strategy are. I know you guys aren't studying and taking this information in for nothing. You gotta have plans. You have to have a point of execution. Where are you looking to deploy this capital? What are you looking to accomplish? Comment down below. Jump in the chats. Let me know. Any questions before we wrap up? Any questions? Anything y'all would like me to go over? Anything I can assist y'all with? Any plans? All right. I'm not seeing any questions pop up right now. We're going to go ahead and wrap this one up. I'm going to keep this one a little briefer than we normally are. I want y'all to stay focused, stay in motion. I'll see y'all soon.